To the Go for CEO community, everyone. Thank you so much for tuning in today. And if you're watching live, man, you're going to get a special treat. This gentleman, over the last few weeks, I've gotten a chance to know him. I've introduced him to some people. He's introduced me to some of the world that he lives in, he breathes in, and he really shares a really unique story. As you guys know, in the Go for CEO community, we talk about startups to 25 million in revenue. And the story always is at 25 million in revenue, usually you kind of take that next stratosphere of going up. I want to stay in this community. I want to stay here so that you could learn how to really start your business, how to market your business, how to grow your business, how to scale, how to get operations really set. You know, in the last week, I've interviewed a business consultant in the CFO outsourcing space. I've interviewed a sales and marketing, and now we're switching all the way to something that I think a lot of people are really, seeking out information right now in this crypto world, hedge fund, and all these things. It's such a cool space. So stay with us, and if you're watching in the future, thank you for tuning in. So this is Zachary, and his startup business is Proxima Investments. He's a co-founder, and I'll let him share a story. But I am so grateful for you to be on here, Zachary. So let us hear your story, and let's start off. Thanks for coming on board.
Yeah, thanks for having me, John. Good morning. And let's go ahead and get right into it. As you already know, I've shared my story a little with you, but we'll kind of start, when I started my entrepreneurial journey, and then we'll get into the current business, Proxima. So I think, my original entrepreneurial spirit was first found whenever I was around 15 years old. And I started my coding experience building websites. And so for about 2.5 years, I built websites, learned about computers, and moved into being a system admin consultant out of high school, running my own consulting business, just learning the ins and outs of running a business, meeting people, all of the financial aspects, the marketing aspects, and the organizational aspects. And through all of, this computer science world I lived in, I discovered Bitcoin back in about 2013. While playing World of Warcraft and selling gold that I farmed in World of Warcraft for Bitcoin. And it started this process in my head of looking to the future and thinking about what might potentially be a hedge fund or an investment vehicle for people who weren't able to navigate the space easily. I found it to be easy for myself, being with a background in computer science, from building the websites, being a system administrator. I just understood the underlying technology and how to navigate it. So back in 2017, I had the opportunity to move to Chicago, and moved here actually in the summer for a financial job, a part-time contract / internship. And during this internship, I met another individual, Jonathan Benedetto. And while we were working together, we kind of started talking about crypto, started talking about Bitcoin and Ethereum. And this was the first time that ICOs, initial coin offerings, which is kind of like an IPO, but specific to cryptocurrency, was kind of beginning to gain traction in the investment world. So we're sitting there in our job one day having a meeting, and our COO of the company is asking us what we're doing in our free time. So we share with him, obviously the typical answers of a young adult. We enjoy drinking, we enjoy hanging out with our friends, and then we shared with him that we were interested in cryptocurrencies, Bitcoin, and about these ICOs. And we shared with him that, in order to participate in these ICOs, you needed to have some type of substantial capital. Being that we were only, in our young 20s, we weren't able to have, the 6 figures needed to invest in some of the ICOs. The minimum investment value was, roughly between 50 to 125,000 for some of these ICOs originally. So we shared this with him. And before the end of the day, this individual comes back to us and says, "Hey guys, me and one of my friends are going to give you guys some funds to go with your personal funds. And we'd like to participate in an ICO that you guys do research on, and let us know, give us the pitch, and we have some funds ready for you." This is about a week or two before this internship ends, and I'm going back to Atlanta. So during this 2-week period, we set up an LLC to be able to take on these funds from these individuals. And I decide to pack up all my things from Atlanta and move to Chicago in order to be able to actually operate this small investment vehicle. In this time period of me going back to Atlanta to be able to pack up my items and move to Chicago, John ended up raising some more funds for us, roughly to the tune of about $750,000 during this 2-week period that I was, in transit back to Chicago. We get an apartment together. Long story short, before November of 2017, we had raised about $1.5 million from various individuals in Chicago, as well as one or two extremely high net worth individuals, and ended up registering the fund with the SEC, meeting with some legal teams, and just in the span of a month, whipping up a hedge fund and a few small SMAs, and building out this business in a short period of time with a thesis of, we want to run this for about 6 to 8 months. We think there's going to be a lot of hype about Bitcoin, and sure enough, it works out. We run the fund for, I believe it was 7 months, starting in fall of 2017, ending in February of 2018. Successfully, returned on all of our investors, profitable returns. It was extremely great. And, that brings me into the current business that I'm in, Proxima Investments. After sunsetting Neochromata, which was the name of the first fund, I met my current business partner. And I believe that was around March to April of 2018. So, roughly 2 months after closing the previous fund. And when I met my current business partner, Matthew Janis, the immediate thing that I noticed was the sustainability of the asset class of Bitcoin, Ethereum, and recognizing that this was the second, go at the hedge fund wasn't going to be the short, 6 to 8 month investment thesis. This was going to be an investment thesis in a business that, would be something that I'm working on for the rest of my life. Something that, as I've shared before with you, I've grown up without parents. And for me, my entrepreneurial spirit is about leaving generational wealth for my future, family and my children. So for me, what a better space to build a business in than, digital assets and cryptocurrency, and what a better wealth vehicle for my future generation than a hedge fund, being able to allow them to, have that vehicle for the future. So we started up the business and we, built out the strategy, spent a year building the strategy, and then bought an office and moved into an office in 2019. And then from 2019 till now, we've just been operating the business, raising funds, building out the, needed software, building out the needed strategy and the day-to-day operations. And so, yeah, that kind of, is a real quick explanation of what's gotten me into the business.
So let's go deeper on that. Hey, and thank you so much for sharing that personal side of things that's inspired you. I know when we first met, I was legally adopted to Andrade as my last name currently, but my birth father was Rivera, and I didn't know him. And then I shared that with you, and your last name is currently Rivera, and you shared that you were adopted. So it's kind of like a kinship of, obviously I didn't know some of the other stuff as well, but thank you for sharing. You talked about a 6 to 8 month window, and gosh, that must have been really rapid fire hose. I mean, you're learning business. Yeah, you're in the mix of what you really enjoy, which is, apparently the investments and all that type of stuff. And it looks like as a team, you guys had somebody that was able to go collect the funds. You were the brains behind the technology and some of the asset classes that you were going after. So now you're at Proxima. What's this 1 year strategy or 1 year kind of look at brainstorming? Describe a little bit about how that year went. And apparently you must have had some funds that you really made some good in that 7 or 8 month stint. So how does that look like? So you could share with people what that year looked like before you actually launch again.
Yeah, that's it's actually a really interesting thing to think about. So you are correct. I was very fortunate with Bitcoin's first, we'll call it a bubble. I was able to make enough income from that business and from those investments that, I built a 3 to 4 year buffer for myself to where I had this ability to, not have to worry about a day-to-day job. So what that year looked like is me and my business partner, and a little background on him to understand, how we were able to work together, is he comes from traditional equity trading. He's was a professional market maker, and worked at some of the top trading firms here in Chicago, has had an excellent career. So whenever we met, the first thing is he's a bit older than me, is we kind of meshed both with this mentorship from an older age to me being younger, and then also from this, traditional finance into this new finance. So there was a lot of this, synergy that we were able to build just from the first month of meeting. Now, what did that year look like in terms of work? The first 4 months were a lot of time spent in a coffee shop, and it was just conversation. It was just sharing, information about each other, information that we had learned from both what I learned from the digital asset space, cryptocurrency space, and what he had learned over his career in equities. So I would say the first 3 to 4 months was just, it was just connecting and learning what each other knew and learning what each other didn't know. During those conversations, we did discuss the business vision. We discussed, how are we going to raise the funds? What do we think the strategy looks like? What do we think the operation looks like? What do we want to scale the business to? So it was just, the original few months were just discussion, primarily discussion, taking notes. After we took all these notes, we learned a lot about each other. We learned what we wanted to do. Then it moved into the actual work. Again, we stayed in a coffee shop, occasionally going to one of those co-work spaces and working there. And most of, after those months and getting into, these spaces, it was the math, building out these, algorithms and equations that would become our strategy. That included studying, while we both had, actively, been utilizing the knowledge to go back and then have to study to be able to make the strategy as robust and as proper as possible, required us to, kind of learn again together. Not that we didn't know the content, but to create, a financial instrument and a financial vehicle, it needs to be as clean and efficient as possible. So, we moved into this building stage where we were, building out these equations, these formulas, these algorithms, and we did that for about 2 to 3 months. Now we're about 3 months away from needing an office space and ready to deploying the strategy. And where this came in was more of, okay, what's the brand? What is our company name? What is our marketing strategy? What are these other aspects of the business outside of the product that need to get taken care of? So, we built and contracted out a designer for the content, the primary content of what we had. We mapped out what a year of the business costs would be, the basic financial structure of the business. We started the legal legwork of, working with our legal counsel, finding who our fund administrator was going to be to verify our returns as we built them. We were meeting with other service providers that we might need. We were building out the office hardware that we we're going to need, the computers that we would need, the desks, all of this other work that, while I knew about it, I didn't realize how much time it takes and how much conversation it takes with a business partner to have a meeting of the minds where, one person thinks that this is more important than this item. And so you have these discussions, and we never got heated, but there was always a little friction where, you're trying to have this meeting of minds. What's more important, in the business space? Is it important to have a better branding right out of the gate, or is it better to first, spend less money there and more money in other aspects? So that was kind of the first year was all of this pre-building before we moved into our office. It was just a lot of discussion, a lot of building, a lot of conversations, and kind of, this cycle, this circular cycle of, starting at a point and working all the way through it before you got back to that original question of, why are we doing this? Is this, the right move? And so everything kind of moved in this circle until we felt like we were at a point that, okay, we got everything down. Let's go get an office.
you laid down such an incredible foundation there of, what people think of when they start a business, which is, the business planning side and the vision, and then the collaboration between you and your partner. Your partner this whole time was still working, right? In a job in the market manager position there?
No, so whenever we had met, he had actually, so we had met in the March of 2018. He had actually just quit his job.
Oh, okay.
He had quit his job. The place he was working at, they're still a successful firm, but he just felt like he wasn't going to be able to continue to move up the ladder. He had made it to essentially the top of the company, and with his skill set and what he wanted to do. And he actually, before me and him had talked, he had actually been working on a equity-based market making entity, and had decided, hey, it's so saturated. Equities are saturated. It's a very difficult space to get into. Here's this new asset class that has a lack of professionalism, also has this bright future. So that is what kind of steered him into the digital asset space. And then we met through a mutual connection, actually. So it was great to be able to have a mutual connection, connect two people who have a passion for this space and for investing in financial vehicles.
Man, and that's what it is, right? You put yourself out there. I know that, I think you said you had kind of left college to start the first business, right? You got deep in, you made an all-in decision to just leave Atlanta, come to Chicago, a place where you didn't really know, but you had a couple contacts because you knew that you had a vision. So pretty incredible. I love that story. I think it would have been really cool to kind of chronicle that first year, right? That vision board year, that planning year, that pro forma, what you're going to do, and just kind of look at it. And God, I wish I would have been there, right, to be able to record it. That would have been awesome. But let's get into now. You start, because you have a strong business plan, you have the capital, and you have the vision. You set up your infrastructure of the technology. It sounds like, were you also at a point where once you decided to start, were you perfectly at that point, or were you still saying, hey, we need, was there some discrepancy between your partner and you, like, hey, we're not ready yet, but you're like, hey, let's go, or he's like, let's go, no, we're not ready yet? So tell a little bit of that story, and then let's go into, now you start the business. So
yeah, that's a great question. I have left out a small aspect of the business. We had a third individual who had been with us that, his primary job was to raise funds for us. Everything else was us building, but his role was to raise funds. So rolling into the office space, this individual had been, just sharing with us his plan for raising funds for our hedge fund. So moving into that, I had just built a fund and, before super quickly and raised, what I thought was a nominal amount of money extremely quickly. So I came into it thinking, right out of the gate, we should just have some, we should be able to raise money really quickly. Yeah, exactly. Should just be real quick. So what I had proposed is, before we get the office, let's get a little bit of funds. The funds that we had invested in the business were primarily operational. We had left a small aspect of that operational for an actual investment in the strategy, to be able to put our funds to work. But the rest of it was operational. So to move into that question, I think most of that friction that we had was around the AUM raising, which, that's the primary, truly for a hedge fund, what you learn is the strategy and all of that aspects of a hedge fund. It's only maybe 20% of the business, honestly. Now that I look back and reflect, a hedge fund is more of a network-based company. It's all about raising money. It's all about having the capital to deploy. So that's where the friction really lied. Me and Matt we were ready to get in the office. We were ready to be putting the strategy to work, to be, spending the daily office hours trading and participating in the market. And as well as the fact that at that time, when we were getting into the office was actually the lowest that price that Bitcoin has ever been since that, first day in the office. It was roughly $3,500 when we moved in, now trading at right around 14,000. So, moving into the office, that the only friction was around the AUM. Everything else, we were just extremely happy, extremely excited to get in there and, put our skills to the test out the strategy, and really get moving on, pushing the product out there.
Awesome. And you're describing a different type of business, everyone. So I hope that you're saying, we've had the pavement group, right? An actual construction type company. We've had sales and marketing. I told you today, it's going to be pretty awesome because this is a different world, right? A different structure of a business. You just talked about it. The AUM, for people that don't know what that is assets under management, and really collecting cash from people that are, trusting you. So real quick, and not so much a sidebar, but did the investors from the first business, did they follow you? I just want to track that just real quickly.
Yeah, so right out of the gate, they did actually not, primarily because the first fund's thesis was very specific. Okay. It was extremely specific. It was, hey, we're going to make, a sizable amount on whatever money you invest very quickly. And this thesis is something that's much longer. Now, to say that there are a few that have now come on board, but originally, it wasn't something that I did not actually reach out to them, primarily because of the fact that I knew that there was some work to be done. And I wanted to be able to have a little bit of a track record to go back to them and say, hey, this is a different vehicle. And over the past, X period of time, this is what we've been able to do, because it was a different strategy. And it was with individuals that, weren't there in the first fund. So I wanted to make sure that I took an amount of time to be able to build it out before going back to them and asking for funds.
And that's a great point. I see a lot of validity in that. A lot of times, we start a business, right, as entrepreneurs, and it could be in different fields. I've been in the telecommunications space when I was in my early 20s. I had a Nextel business, Nextel retail, pagers. I'm dating myself on that. Cell phones that flipped instead of having a screen. That's how old I've gotten. But I remember creating some great relationships, and to this day, I probably still have 5 to 7 of them. Actually, Marie at Revenue was one of them. I transitioned into the automotive space. I started the autogenie.com. I always like to say I was the first Carvana. I just didn't get as big as Carvana. And then in 2009 got into the financial world. And it's interesting, when you think about the relationships that you've been able to build, sometimes we also are hesitant to ask those same relationships to do something else, right? And especially in this one, you kind of tweaked your model, right? But it's interesting. I like the perspective that you said is like, look, I was going to go, prove myself again. Build this new model. It was a little bit different structure, a little bit different partnerships, and then probably then go back to them. But after you've already set the precedent that you've succeeded or started to succeed again. So pretty awesome stuff. So tell me, this seems like you guys joined forces with your current partner in March of 2018. You spend a year. Now we're in 19. So we're kind of getting into almost the middle of 19. We've got about a 9-month window till we all know what happens, right? In March of 2020, we get this pandemic. So what are you doing in that 9 or 8 months that now has led you to some consistency throughout this level? But let's explore that side.
Those 9 months were a lot of learning. A lot of learning that things are not always what you plan, and a lot of refining. The strategy we built was working, but it needed a lot of tweaks. So what we were doing is having to, take a lot of time to look at what wasn't working and look at what was working and figure out the changes that needed to be made in the strategy. It was a lot of learning from meeting with investors. The first fund I had, most of those funds were raised from friends and family. and some high net worth individuals that, because of the age of us at that time, who were like, okay, you guys are young, you guys are doing something kind of cool. It's, not this very serious thing. So it was, kind of this jovial, like, investment for them, where now with this fund, when you're meeting with people, it's much more serious. There's a lot more due diligence. There's a lot more conversation having. There's a lot more analysis on both me and my business partner and our individual who's raising the funds. These people who we're meeting with is very different than what I was used to with the first fund. So it was a lot of learning. We were meeting with all of these, potential investors, and we were recognizing a lot of things about ourselves and about our product that, we hadn't known before we had launched. We were getting battle tested, and not to say we lost these battles, but we were definitely, we were taking a lot of lessons. We were learning what the investors and potential investors were wanting out of a product in the digital asset space. We were learning a lot about ourselves and how we present ourselves to these individuals we were meeting. We were meeting with both high net worth individuals. We were meeting with family offices. We were meeting with other trading institutions that do these type of investments in hedge funds. And so those 9 months were a lot of learning. We were performing well, but we knew that the strategy could perform better. We were, to be completely honest, struggling to raise funds, which in hindsight, I did know was going to be, an issue, because of the fact that raising money in a hedge fund without a track record is extremely difficult. Investors want to see your strategy operating for, a period of time before they feel comfortable. If not, they feel like they're taking a gamble on the strategy without, this past history of performance. Even with my performance of being in the industry, there was a lot more convincing that needed to occur. So those 9 months were an extreme learning experience. We had raised from a few small friends and family, a very unsustainable amount of capital. So moving into 2020, moving into December of 2019, we had a team meeting. We said, okay, guys, we've been in the office for a year. We've done well. We had made roughly, I think it was like 37%. Do not quote me on that. But I believe it was 37% for the first year of the strategy operating. The AUM was not sustainable for the business. So in December, we had outlined our 2020 plan. We had upgraded the strategy in November of 2019 from all what we had learned in those previous months. And we had launched a trading software that we had been working on all through 2019. So in December, the planning that we had was around AUM raising. How are we going to, what do we need to do personally to be able to, better convince, in a way, better sell ourselves and convince investors that, we are going to be good stewards and good custodians of their capital. And, we're going to be, acting in ways that are conducive to selling our product. So we moved into 2020 with this plan, with a lot of personal development and understanding of what we were doing wrong. And, we had this great plan ready to go. January, we hit it off. We're going well. February, there's being in the financial marketplace and the financial industry, you're always hearing chatter about, world news, what's going on, what are these, geopolitical events. And we were hearing this chatter in February about, what's going on in China, the COVID-19 potential. I don't even remember if that's what they were calling it whenever we first heard about it. I believe they were, but we started hearing this and we got a little worried. I remember in February, we had a meeting and said, guys, if what we're hearing about in China becomes a bigger issue, is this going to affect the business? And then sure enough, we roll into March and April, and it becomes a very real thing.
You brought up a couple of topics, and I wanted to make sure I kept these nuggets in my brain. Sales cycle. A lot of people don't realize different industries have different sales cycles. You're in an industry that first go, it seems like a lot of internal network, family, friends, people that and boy, a lot of businesses start that way. But now you're getting up to that next big boy level, they call it, right? The one that you have to pitch, people that don't know you, that maybe have heard this pitch before, and they want to see how strong you really are. Do you have any of your own skin in the game? Hey, check back with me in 3 months, in 6 months, in 12 months. Let me see when you're successful and I've got $100 million in my family office or what have you, right? So what an incredible journey that is. And I hope that the audience takes something from that. Get prepared for your own internal sales cycle. Now let's also unpack AUM. When you said AUM, that's assets under management, and you said, hey, that wasn't going to be sustainable. Can you unpack it a little bit in the sense I'm thinking, hey, you didn't have enough in the fund, even though you were making 37% unquoted, right? Not yet quoted, 37% on that fund. It wasn't enough to sustain you, your partner, your operations, your office. I mean, there's business behind this strategy, right? So unpack that piece of it and how you got to now where you started to say, okay, we have enough funds that if we continue on this strategic plan, we're going to be able to operate our business and maybe even scale.
Yeah. So, first, as I shared originally, the business operating expenses were covered by me and my business partner and the third party fundraiser. We had built out a year originally of operating a cost, which ended up becoming, we did another capital call, not for a large amount of money, but to build out another 6 months of operating capital. So we had built out, this roadmap of where we needed to be at the end of our capital expenditure budget. And so we got also fortunate that rolling into 2020, after recognizing, okay, the AUM is only a couple $100,000. I think it was like 190 grand actually, extremely low and not sustainable at all. I had a mentor, and I still have a mentor. And I went to him and I shared, my issue. I was like, listen, we have this strategy. We know it works. I had to share with him and humble myself and say, I went into this thinking that raising funds was going to be easier. I have found that is not the truth. I have found that, it is a lot more difficult and is going to be a longer process than I originally had foreseen. And, I just kind of shared all this with him, and I shared, all these other aspects of the business that were going on. And he came to me and he said, okay, I will come and do a seed investment with you guys. I believe in the strategy. I believe in you. He came up to Chicago. He met with us. He sat down. He asked us all these questions, got to know me and, got to know Matt, and was able to really understand what we were building. And so, this year and a half capital budget quickly, became a 2.5 year budget from a seed investment with him in January of 2020. So the AUM worry got kind of pushed down the road a little. We were able to, get some more time to be able to start this AUM raise and really be able to move into it. But like you said, March, COVID-19, really became a big issue for the world. And so even with that seed investment, giving us a little bit more time, we now ran into a second issue, which is fundraising. It pretty much became this very scary thing. People are worried. There was the risk off event in March where, we saw all global markets, even gold and assets that are normally safe havens, all of them sold off. So we got super excited with the seed investment. We're like, okay, this is great. That only bolsters our ability to, continue to build this. It also lets these potential investors feel comfortable with us even more because they see that there's this other individual who is funding us that, is extremely successful himself. So it gave us a little, confidence boost. And right out, February and right into that risk off event, we had raised roughly 200 grand really quickly. So we had, right around the $500,000 mark. And then COVID-19 happened. So I hopefully that gives some insight into your question about asking, unpacking that AUM question. It's an interesting thing where, in the hedge fund world, especially coming from, not having this highly developed reputation or highly developed network that you normally see hedge funds have whenever, they launch.
Definitely. And it's, again, this is a different type of business, ladies and gentlemen, a different structure, a different way of thinking about it. So right at this point, how many are employed inside this fund currently?
At this point, there's three of us. It's me and Matt, and then we have this individual fundraising for us. Just three of us.
Contractor, or is he an internal employee?
He actually has some equity in the business. Had some equity at that time, and primarily, his sole job was just to raise AUM for us.
Okay, and I guess. So you and your partner, Matt, are co-founders. You have this gentleman working with you in a strategic piece of business development, what you would correlate to be a business development in other businesses. How are you keeping him accountable? Obviously, this will be a little bit of a rub, right? It doesn't seem like he's doing a fantastic job bringing in a ton of assets, but he's got this position. How are you coaching him? How are you developing? And how are you keeping him accountable?
Yeah, John, these are some great questions. And, this section might get a little bit long because there's a real interesting story that occurs here. So this individual, he is struggling with it. And, he comes from a sales background. So it isn't a question of his technical skill. What it was becoming is a question of his ability to understand what Matt and I had built and to be able to properly convey what we had built to other individuals and have the people he's selling to understand crypto, understand the digital asset space, and then understand the strategy that we had built. And for us, at this time, Matt and I are working full time at the fund. We're in the office every day, and this individual still has his full-time job, which when we met with him and discussed this, it actually made sense that he kept his job because his job was in an industry very related to, digital assets, and the network that he was building in his primary job was extremely valuable to us because those were the exact type of people that would invest in the fund. So, we understood for the first 6 to 8 months, hey, it's going to be very hard to get investors. That's just, how hedge funds work. You got to build a track record. So it wasn't a big issue. It became a big issue moving into 2020 because now we're at a point, okay, we know we have like a year of funds left and we need to be able to hit our targets. He comes to us in January and says, hey guys, I'm struggling to raise money for us. I'm also running into some personal life issues. He has his 5th kid on the way. Yes, exactly. He has his 5th kid on the way, unexpected. On top of that is just sharing with us that his job role is becoming more comprehensive. And so, at this point, Matt and I are, red alarms are going off. We're getting a bit worried. We're like, okay, where this is not good. So, that was around February of 2020 before COVID had happened. And we had sat down and had these conversations with him about, his knowledge about the strategy, about the quality of work, about the strategy that he had built out and we had helped him build out for raising funds. And, up until this point, there was probably 3 or 4 conversations we had, and I would say fairly serious conversations we had about the performance of his role and the performance that he had. And, we were very understanding of the difficult role that he had. But at the same time, we also had to put the business first and understand that, even though we did enjoy this relationship we had with him, we did understand the difficulties. At the end of the day, performance, it just matters. It just has to happen. So that is, this brings us into February. We had multiple conversations with him. And, there was an event that took place where we were like, listen, there's 2 options here. Either you you're going to have to move on, or we're going to have to reduce your stake in the business, and you're going to have to put in more work to be able to, hold on to this stake that you have in the business. And that's moving into March, into COVID. And I guess we'll kind of move through this. And, through COVID, unfortunately, this gentleman, he went about 4 months with just not even contacting us, just kind of fell off the face of the planet. And Matt and I recognized it very quickly. And Matt and I instantly went into our own personal fundraising. While we were sharing what we were doing with our friends and family, we weren't actively fundraising because, on the day-to-day basis, we're, managing the portfolio, we're developing code, we're, doing the math to continue to improve the strategy. We're doing the daily business operations, and fundraising was not a part of that whenever we had started this. And so whenever we recognized this shift in his performance and in his role in the business, Matt and I, we said, okay, we've got to take this under, and we're going to have to put this into our daily operations. And so we did that. And, fortunately, we found a lot of success compared to the success that he had very quickly. We, over the course of COVID-19 from March up until now, we were able to raise $1 million. Matt and I together during COVID-19, which for us has been an extreme success. We went into COVID-19 thinking, this might actually be the end of the fund because one, we had the risk off event, which actually the fund handled incredibly well. While we did have a drawdown that month, the next month we had made back all those losses. So at first it was a big worry. We said, okay, COVID-19, March, this is very scary. We just lost, technically we had lost this individual, from the quality of work standpoint and the fundraising standpoint. And we quickly just were able to, recognize what was happening, take action on what was happening. And, it's turned out to be a pretty good turn of events, looking back.
And, I keep on thinking, you guys, you're on the technical side, right? You're on the vision side, but you hire this guy to kind of be this piece of the puzzle. And, unfortunately, sometimes you learn hard lessons, right? Mm-hmm. And I hope people picked up on it. I know I've picked up on it because I've done the same thing. I've always been more sales and marketing, but I actually, in my first business, let my partner be the operations and the money guy and kind of just making sure that they're handling CFOs, CTO type stuff. And what I found was in my first business, telecommunications business, we ended up owing over $300,000 to the IRS because he wasn't paying certain taxes, and we rolled up employees quickly. We weren't paying, workers. I mean, just like all these things that I was like, I'm just going to sell. So you almost had the opposite, right? You're the founders, the visions, the technology, the infrastructure. You got this guy that's just not performing at a very key thing, right? Mm-hmm. So you had to transition. So wow, what an incredible turn of events, and so exciting to hear that even through this time that people have been challenged in some ways, that you guys basically, for metaphor, this is on video, right? Rolled up your sleeves, took on another hat as a business owner, which entrepreneurs have to do.
Yes.
Listen to me. We have so many hats as an entrepreneur, right? But when you start to develop it, then you start to grow into self-employed to a business owner. So really, really cool, really cool. So, there's the acronym GO for CEO, and what we try to teach people is, client or customer experience for the C, E for employee engagement, and O for operational excellence. So, we're winding down here this first interview, and thank you so much, Zach, for coming on. I'd love to have your partner on as well, and in the next 6 months, follow your journey, and hopefully over the next few years, that's what this, channel is going to do with you and see that voyage. So can you tell me a little bit about how the client experience that you guys are doing? So, you're in a fund, so it's a little bit different. You're not delivering an actual product, a finished good, a car or whatever. How is the client experience within Proxima going?
Yeah, so I'll just kind of share what it would be like if a new investor came to us, and we'll go through the whole life cycle of what that looks like. So we get in contact, or they get in contact with us via email, phone, and as of now, primarily are discussing over the phone and Zoom calls. However, we do have an office, and we do invite people if they feel comfortable enough, if they're willing to follow the protocol that we have for staying safe in this time, to come down to the office and see the operation. Whenever we first talk with people, we share our personal backgrounds. We get to know what they're looking for, what their concerns are in the space, and we share the strategy with them. This usually occurs over a period of 1 to 3 phone calls or meetings. And then once that occurs, they agree and they're looking forward to investing, we share the legal documents with them that are needed, the subscription agreement and the PPM, which, outline all of the risks, outline all of the legal obligations that we have to them, and also the things that we are not obligated to them for. And so, we send all our documents to them whenever they are agreed to invest, and they sign them, they return them to us. And what we do is we have a client package. We have a very nice box, kind of like a box that you'd receive a book in. And inside that box, it has our logo. It's designed well. You open it up, and inside is all of our marketing material. We have a pitch deck, our tear sheet, some business cards, and it has their copies of their contracts. If they're ever looking, they need to look back at it. We send all this, and then we also send them a Proxima polo that we have, and we ship that all to an investor whenever they sign on with us, a thank you letter, and they receive that in the mail, and then they wire their funds to our business bank account, and we discuss with our fund admin. Okay, this investor is ready to go, and we let the investor know on this date we're going to go live with your funds. And we go live with their funds, and we send them an email. Your funds have gone live. And then after the first month of them being in the fund, they receive an email from both the fund administrator outlining the actual you see it with like mutual funds or other investments, where you receive your statement, your original account balance, what you've made and or lost, and in a very generic template. They receive that from our fund administrator. We then follow up with a monthly update, which outlines our perspective on the market, what happened, what the business did over the month. And then, it also includes the returns of not just the hedge fund, but of digital assets. So you can get a really more in-depth view of your investment from this email that we send compared to the fund administrator, statement. And, from that, that occurs every month. And, what happens at the end of the life cycle is, if an investor wants to remove their funds, they give us a heads up. There's a 30 to 60 day, depending on the size of their investment in the fund. And, we exit their position. We work with the fund admin to mark all of the details of that exit. And we either wire, write a check, and in some cases, we'll return it in digital assets if the investor wants. And we return those funds to them. And then we haven't had to do it yet, but we have a letter that we draft up, we hand sign, we thank them for their time, thank them for what they've done for us, and then we send that to them, and that ends the life cycle. We haven't had to do that yet, and as of currently, we're just sending out the monthly updates, and everyone's been really enjoying it.
Wow, I will say that's one of the best descriptions to date of a true step-by-step client experience. And you have to do it, right? You're dealing with people's money. You're dealing with people's kind of soul of what they've been able to build. And wow, what an attractive way. I really like the package. I love the polo, right? To help them feel like they have a connection to you. And when they wear that polo, they hopefully feel like, they're a part of something. It's kind of like with real estate, right? People, I think, are attracted always to real estate because you can go touch it and feel it. But this is an intangible, right? You're taking their money and vaporizing it, putting it into your account, and then giving them statements that hopefully that they can get it back, right? So, but no, what an incredible experience. I love that. So you touched a little bit, because I kind of forced the issue of sharing this gentleman that was on the AUM side of things at building. but what would you say that you learned about employee engagement through the small cycle and going into the future as you bring on new talent?
Yeah, I think what I learned the most is one, to follow intuition. As I shared, there was four, distinct meetings about the quality of work, about the success of this individual. And I would say after the second meeting, I intuitively knew that this was not something that needed to go on any farther. So for me, I took away, listen to your intuition. I also, for me personally speaking, is, I am the youngest out of the partnership. My partner, Matt, is, almost 10 years older than me, has a lot more experience professionally and just experience in life. So I kind of shied away from voicing my opinion because I just assumed that he, knew what was right. And not that he didn't know what was right, but I kind of lacked a voice for a period of time. I didn't push hard enough on what I believed in. So for me, this individual has taught me listen to myself intuitively, and also to believe and voice my opinion more strongly. I think that's really what I took away here. And then also to believe in myself and other people to be able to do things that, aren't necessarily what you signed up to do. So that's really what I took away from this situation that occurred.
Awesome, awesome. And then lastly, let's end with operational excellence. How are you guys tweaking some things? How are you looking at your infrastructure? What's the operations looking like to make a differentiating value proposition with Proxima?
Yeah, so what we've done is we've tried to codify everything within the business. Fortunately, the mechanics of a hedge fund and the operations of a hedge fund are not very complex. What it more revolves around is just what is the market doing? If the market's busy, operations, they take a hit. And so if you're able to automate processes within the business, it allows you not to have the worries of, if the market is active, you worry that other aspects of the business might fall away from the focal point. So for us, what we've been able to do with operational excellency is codify as many things as we can and automate things, and to find service providers and individuals who are able to help support these operations. We have a fantastic fund administrator. We have a fantastic legal counsel. We have fantastic, custodian providers for the assets, things that, we wouldn't want to do internally. So for us, I think it really operates around, building out autonomous methods to allow operations to be seamless, as well as we are always testing and retesting the operational aspect of the business. We're always discussing it on a daily basis. How is workflow? What's wrong with the current workflow? What's working with the current workflow? We use project management software and are rigorously updating it. So we always know what's going on. Where are the pieces on the chessboard? Do we have pieces that might be in jeopardy? And do we have pieces that are in good position? How do we take advantage of these places that we're in? So I think, for us, it's communication, automation, and then just making sure that you have service providers and people that, are willing to work hard to provide you with, what you need. And so for us, that's what allows us to have operational excellency. I will definitely say that, we're not where we want to be there, but we're working towards what we see being the perfect operational procedures and the ideal workflow. And it's nothing is ever perfect. It's always going to take incremental steps and testing and retesting of those procedures that you have.
I love it. And gradual improvement is always a big deal, as long as you understand that it takes time, but you're working at it and you're moving forward. So sounds like you and Matt, really have come back down to core. You've locked arms together. It seems like you guys do, complement each other very well, and you're learning from each other and growing this. So right now you're over a little. It sounds like over $1 million in AUM. What is the goal over the next year or so to get to? And then we'll start to kind of break this down as far as just the end of this interview.
Yeah. So for the next year, our plan is to, our soft target is 3 million. In the pipeline, we should be able to hit that by summer. Right now with the election and things, a lot of the pipeline has said, hey, let's just wait. Let's wait till the close of the year, moving into January. We have some letters of intent. We have some contributions that are waiting just for this current, political event to occur and to make sure that everything, is going to be okay moving out of it. So our soft target is 3 million. By the end of the year, we're looking at 5 million. Right now, we're going through a little bit of a marketing revamp. We're getting our content and all of our portfolio data, redone. So that's super exciting for us. What that allows us to do is to, start meeting with potential clients that before we were a little apprehensive with because we had built the content ourselves. And now that it's being done professionally, we look forward to being able to meet with these individuals. We also are currently in discussions with potential GPs. We're discussing with some very prominent names here in Chicago in terms of purchasing some equity in the business that'll farther us towards our goal of being able to raise AUM, having these names behind us and having individuals involved in the business that have extremely large networks and a lot of great experience and knowledge. Getting them on board over the next few months is going to allow us to hit these targets. So yeah, looking at 3 million by summer, 5 million by the end of the year. And then over the next 3 to 5 years, our goal is to never exceed $75 million AUM. We want to be an agile fund. We want to, not have to worry about all the compliance that comes with, exceeding $250 million in an AUM. We want to stay agile. And we want to just provide customers with the best experience. And I feel like whenever you kind of exceed a certain size in a hedge fund, there's a disconnect between, the owners and the co-founders and the actual people involved in the business.
Well, what an exciting space, digital currency. This guy's in his 20s, Zach. He comes from Atlanta. He had some personal things that happened that really has shaped his life. And I'll tell you, I'm excited to stay connected with you, to learn about kind of how you're going on a personal level. And then also 6 to 12 months from now, have you back on, hopefully even with your partner, Matt, and see kind of where you guys are at, exciting times. And thank you so much for coming on. A lot of times it's about telling the story, about inspiring people, but also the minutia. You really got into what it is that the client experience is, the employee engagement, the operational excellence, and then the steps that you took to really mastermind and then come to fruition of your business. So, Zach, I really appreciate your time. Thank you so much for joining the Go for CEO community. Any last words for anybody that may be thinking like, hey, they're worried or they're scared or they're, wondering what's going to go on in the election, all that stuff? Like, what's one last thing that you would share with someone looking to be an entrepreneur as well?
Yeah, first off, John, thank you for having me. I really appreciate it. You've been so kind, and I look forward to seeing, you grow this channel as well. The information that, you're able to bring to the forefront is really important for people and entrepreneurs and even people like me who are in it to be able to look around and see what other people are doing and learn from them. So I really appreciate what you're doing. If I was to leave any words, I'll first say that taking risk is probably one of the greatest things you can do in life. For me, that is, one of the lessons that I've learned is that nothing great comes out of not taking risk. Like if you want something great in life, if you want to, really pursue your dreams and your passions, the only way you're able to do that is by taking risk. So I think that is one thing I'd love, for anyone listening to take away is to understand that you have to take risk. That doesn't mean to take, the wrong risk. It just means to take risk, whatever that means to you. Second is to learn to be positive, even in the worst situations. Even whenever you're feeling like the whole world is bearing down on you, you think that failure is imminent. If you can build a mind space of positivity that you always can go back to in the hardships of life, you will find that, life becomes a lot easier. It becomes so much easier to move through the obstacles of life whenever you're able to build a mental space of positivity. So yeah, those are the two things I really can say. You know, if I was to add a third, I would say always act in love. You know, it sounds kind of cliche, and you know, maybe not necessarily the best business advice, but for me, what I've found is if you're always acting out of a point of love and compassion, you know, with whoever you're working with, and you're being empathetic with these people that you're working with, or you know, that you're selling products to, or you're interacting with, you will find better results than if you're, you know, acting out of a place of you know, ego or something like that. So I think those are the three things that I would take away from what I've learned through my entrepreneurial experience. Take risk, you know, act out of love and empathy, and then, you know, being able to, you know, just to take those things and move forward with them.
Awesome, brother. Well, hey, thank you so much. I'll end the stream there because there are no better words than coming from someone that is really in the midst of it, and hope that the community sees value in this different type of business, the investment world. So hope you learned some. Please join again. I don't do enough of this, but hey, click that like button, leave a comment, subscribe to the channel. I hope you're getting real value. These aren't the biggest names in the world. These are the real people in the world, the little guys, the people that are starting up to 25 million. I'm excited to see where, when you guys get to that 75 million and probably approach quickly to that 25 million in actual top